Hello, everyone. Good morning from this part of the world, and depending on whichever part of the world you're tuning in from, good afternoon and good evening. Welcome to today's midweek review session of our Forex Morning Mastery. We've got an exciting lineup ahead where we will be diving into the latest development across our key assets that we are monitoring for this week, which includes the USOILSPOT, the GBPUSD, and the XAUUSD. My own name is Sheriff Daramola, and for the next 30 to 40 minutes, I'm going to be your host as we will be navigating through the current market dynamics of these particular assets. Whether you're joining us for the first time or you are a regular viewer, I'm thrilled to have you here. And in fact, you do want to be stay tuning so that you don't miss out on the ideas we will be deliberating on. So in today's session, we will dissect the recent market updates we've refined, uncovering potential trading setups and strategies to navigate the remainder part of the week. And it's important for me to also emphasize that this isn't just about signal, it's an educational journey, a platform where we come together to decode the behavioral patterns of market participants and, of course, use this information to strategically prepare ourselves for the next move. For those of you joining me for the first time, you're highly welcome on board. Glad to have you here. And the Forex Morning Mastery is a session we run 3 times in a week, Mondays, Wednesdays, and Fridays. And of course, we do come together here to understand the behavioral patterns of within the market that of the assets I monitor week in, week out. So these are the 3 major assets I usually monitor every week. So join me as we explore the dynamics that has been shaping the US oil market amidst geopolitical tensions, analyze the impact of the recent UK economic data on the GBPUSD, and of course, decipher the path forward for gold as we continue to see strong appeal for this particular safe haven. Remember, we are here to learn and grow together. So let's dive right in and make the session an insightful and actionable one. And if you do have any questions whatsoever, feel free to let me know in the comment section. Any questions, clarifications whatsoever, I'm here and willing to be of help in that regard. So with that said, let's dive right into the business. So as always, the first thing we normally do is to keep tabs with the fundamental factors that will be influencing the sentiment in the market today. And of course, we are also going to be taking a look at what has been going on as regards to the fundamental factors behind the scenes since the beginning of the week as well. Now, you all know, based on the asset we are monitoring, we have been focusing on economic features from both the United States and the United Kingdom economic dockets. Now, for this, where we do not have any high impactful event, we usually include the mid-tier so that we can have a broader view into what majority of market participants will be looking at to gauge their decisions. So on Monday, October 14th, we do not have any high impactful events. So instead, we focused on the mid-tier, which are speeches from both the United States and the United Kingdom economic docket. When we start talking about this asset, I will be expatiating further on the highlights from these speeches. Now, yesterday, Tuesday, October 15th, we had a bunch of impactful events, most especially from the United Kingdom. Most of them are labor-oriented data, And of course, from the look of things, we saw that the labor sector had come out. The data coming out from the labor sector is more or less mixed. As we saw, unemployment rate declined by 0.1%. So we had 4.4% actual data as against market expectations of 4.1%. And of course, the previous month, which came in, had 4.12. Then the employment change data came in higher than market had expected, which shows us that the labor sector is tight. Of course, whenever we have an increase of this figure, it is seen as a bullish signal for the pound sterling. And the same thing also happened with the claimant count change, which also came in below, just as the previous month, which is not there was no improvement at all on that one. However, this old data here had no significant effect positively for the pound sterling. We are going to be looking at that in details when we go right into the chart. Then yesterday as well, we also had an economic event from the United States, that is the New York Empire State Manufacturing Index, which gives us an insight into the manufacturing sector of the New York area. And of course, the data came in way below the previous month and way below what market had expected at a deficit of 11.9. So it has been, so these are the things we saw in the last couple of days. And as we head into today's session, today, Wednesday, October 16th, we already witnessed the high impactful event for today, all of which came in from the United Kingdom, and that is the Consumer Price Index. Now, for those of us who are not familiar with what the Consumer Price Index is, well, this is an inflationary data. It measures the average change in prices of goods and services in the last 30 days, indicating the inflation level within the United Kingdom. And usually, theoretically speaking, a higher CPI usually signals rising inflation, which may lead to the Bank of England raising interest rates. And this could further strengthen the GBPUSD if the data comes in higher. And if the data comes in lower, this may prompt rate cuts, weakening the GBP. And this is the theoretical expectation. And of course, if we look at the outcome of yesterday's session, we see here that all of the data, both the month-on-month and the year-on-year, came in below what market had expected, and of course below the previous month data. And for us, this is a very good signal that inflation is easing in the United Kingdom. And what does this mean? It means that the Bank of England is likely going to be cutting interest rate next month, making the pound sterling less attractive for investors at this point. And the immediate reaction this morning was very massive, as we saw the pound sterling drop significantly to the downside. Now, will this momentum continue? Well, we will be looking at that in a moment. So I guess you stay tuned in so that you don't miss out on that one. Now, later today, we do not have any other impactful event to look forward to except for the monthly budget statement, which is a trade balance from the United States, which I'm not really keen on knowing, but we could keep that also in our view. This does not have a time for today. Maybe by tomorrow, we should be getting an insight on that one. Now, with that said here, I think we also need to take into account the important event coming up tomorrow as well, which will be influencing how market participants will behave today. And one of which is the initial jobless claim count from the United States coming up tomorrow. And we also have the retail sales data, another high impactful event, which everyone will definitely want to be looking forward to. The retail sales is a key economic indicator that measures the total receipts of retail stores, and this represents the rate of consumer spending in the United States. So we also want to be looking at that, as it will provide an insight into the health of the US economy and consumers' confidence in the US economy as well. So I encourage us all to mark out the timing for this one. That's 12:30 p.m. UTC tomorrow. That is the retail sales data. So besides this, there are no other impactful events to look forward to. So with that said here, let's dive right into the business. So as usual, the first asset we are going to be looking at this morning is the USOILSPOT, which has done pretty well since the beginning of this week. We've had some very interesting situation here. Remember, we have been selling the USOILSPOT since the beginning of the week, as we saw price action break down that support line. Now, for the sake of educational purposes, let's quickly run through what really happened at the beginning of the week and what structures were we looking at to help us navigate this market dynamic. And I will not be going into the higher time frame. We already done a top-down analysis during our Monday session. So if you do want to have a background knowledge, probably you're new with us today and you want to know how we got to the point we are right here, I will encourage you to watch my video, my Monday video, where I did a top-down analysis on this one. So right here on the 1 hour time frame, our execution time frame, this was what we were looking at. The first thing we observed here on Monday was the fact that the week started on a strong bearish note. Price started around the $75.60 level, dropped significantly into the $74.05 area with an engulfing bearish candle. And it took a while for price action to find a path. As you will see, we saw a little bit of consolidation here. And one of the things I said here on Monday is that if the buy pressure we see here, that is the support line we see at the $74.05 is anything to come by, well, a breakout retest of the $74.75 level will be a good signal for us to jump into a buy position, and of course had more had the breakout of the resistance line for the week at the $75.60 level. However, that never happened, as you will see here, and instead price did break down the support line of that range bound structure. And this was exactly what I was mentioning here on Monday. I did tell us here that I will not be joining a sell unless I see a confirmation. And what I mean by confirmation is price breaking down the structure, then coming back to retest before I jump into a sell position, which was exactly what happened, giving us a beautiful opportunity to join that decline. And as you will see, price continued to drop. It even went on to break down the key level at the $71.50 level, giving us the privilege of maximizing the potential of that bearish move. And as we saw here, price dropped significantly into the $69.85 level, or let me approximate it to the $70 area, with a whopping 420 pips right there. And of course, during my commentary yesterday morning, I did mention that we move all stop losses to secure the current sell position, and depending on where you have moved your stop losses to will determine if you are still in the trade or not. Personally, I moved mine to break even on the second sell position, which is right here, and of course I still have the 2 sell positions active at this point. So the worst case scenario for me, if price action snaps out of the structure, will be a 250 pips move, which I'm still very okay with. And for those of you who still have your active position, your sell position active, well, I would advise you to move your stop losses, move it to break even at that entry of the second sell position around the $71.50 level, while we give enough breathing space for price action to move around. Now, with a well-secured position at this juncture, what is going to be our plans for today? What are we looking at? What are the chances that sellers will continue this downtrend? And are there any chance that buyers can come in at any point in time? Well, if we look at the fundamental factors, that is the forces behind the scenes that is driving the sentiment in this market, everything is screaming bearish at this point. All the factors behind the scenes are quite negative, though we have the geopolitical tension still going on. But Israel, from the report we got yesterday, Israel refraining from striking Iranian oil sites has reduced the likelihood of a supply disruption, and this has further lowered price as investors are now marketers are no longer keen on aggressively buying the US oil spot because the concerns of oil disruption has reduced significantly at this point. Then another factor behind the scenes is the weakened demand for China. Remember, China is the largest importer of oil in the world, and this is their fifth consecutive month of declining oil imports, which also signals weakening demand in the global market, hereby exerting downward pressure on oil prices. Now, from OPEC's demand forecast a couple of days ago, they downgraded their global oil demand growth forecast for 2024 and 2025, which also has pressured prices negatively. Then another factor we cannot ignore is the strong US dollar. Currently, the US dollar is very, very strong, and despite the expectation of interest rate cut, the idea that the interest rate cut will be moderate by the Fed makes crude oil more expensive for international buyers. The USOILSPOT is a US dollar denominated asset, and if you do want to be buying the US oil, you need to convert your local currency into the US dollar. And right now, the US dollar is quite expensive due to this increased value. So as a result of this will lower demand significantly. And as well, the highlight of global supply in crude oil that was projected by both IEA and OPEC also suggests that price could drop further to the downside. Now, like I did say earlier, there are not any clear positive drivers in the US oil at this point. However, some factors could potentially slow down further price drop or provide temporary relief and probably bring in some rebound at any point in time, like the fact that the geopolitical tension is still in place. Despite the easing of immediate concerns, tension in Middle East still remain very high, with Israel's ongoing threat of precise retaliation against Iran. So any further escalation could quickly change the supply outlook and then shift momentum in favor of the buyers. So we cannot take out the bullish potential in this particular market. And also the US dollar presently, if we look at the DXY, that is the US dollar index. Let me see if I can bring that up quickly. So if we look at the US dollar index, as you will see here, I think we should look at it from the 4 hours time frame. Let me look at that so we can have a long-term overview at this point. So you will see here that though the dollar is at some all-time high at the moment, but we are at around a resistant line where we have been seeing selling pressure from that area around the 103.400 since the beginning of this week. Now, will this area continue to be a solid resistance? that is inhibiting buyers from continuing to the upside, well, that will depend on how the market reacts to the retail sales data coming up tomorrow. So we are within a very strong supply zone. Will price break out of that area, or will sellers push price to the downside from that particular point? So this could also be a significant factor in influencing the prices of the US crude oil commodity. So if the dollar weakens, it could make crude oil cheaper for international buyers, potentially supporting demand for oil prices. While these are not strong bullish factors, they could slow down the pace of decline or even trigger short-term price recovery under any specific circumstances. So as a result of this, we are going to be taking into account both perspectives so that we can be on standby to capitalize on whatever opportunity the market presents to us today. Now, with this information here, and try to understand how market participants are digesting these views we just talked about, let's look at the character and nature of price action, especially in the last 24 hours. Now, after that strong bearish momentum that started on Monday, we have noticed here that sellers have been finding it difficult to break through that $70 zone, which for me is could be considered as a temporary demand zone at this point in time. Now, the inability of sellers to break down this structure could trigger a reversal setup that could incite maybe a correction of this impulsive bearish leg that started on Monday. So we could see a situation where price could retrace back maybe into the golden zone area that is between the 50 and the 78.6% area before price drop further to the downside. There is a possibility here, or price action goes ahead to break down the support line to continue the downtrend move. So now that we have this perspective in view, how do we intend to position ourselves for the next move? Now, before we go further here, I want to mention that I stated earlier that for those of us that still have a sell position running, move all stop losses to the second entry here at the $71.50 level. So let's make sure we do that right now. Now, in order to understand what is really going on here, we will need to scale down into a much more lower time frame. As you will see, price action appeared to have been caught within a range bound structure, like a $1 range between the $70 and the $71 area, emphasizing the prevailing uncertainty at this point in time. Could it be that major key players are waiting for the retail sales data coming up tomorrow to decide if they are going to be continuing their selling, or probably it's time to start taking some buy positions? Well, scaling down into the 15 minutes time frame, I was able to identify a simple setup that we are going to be using today. And the simple setup here is all around this descending trend line we have here. Now, if we look at what has been going on here in the last 24 hours, you can see here that since price broke down the trend line, we see it here, it has continued to form selling pressure, and then we saw price break out of the trend line here with an attempt that price may continue the uptrend scenario, which obviously failed, as you will see here, and price is right back into that descending trend line. And in fact, the last 1.5 hours has seen price action oscillate around that descending trend line. Now, will this trend line be respected today in an attempt to continue the uptrend move, or will it be broken to the downside to further emphasize the strength of the sellers at this point? Well, let's look at this from a structural perspective. Now, at this point, you can see here that following that impulsive move to the downside, it appears that price action transitioned into a reversal pattern in the form of a double bottom structure. As you will see, we saw the first touch here, we saw the second touch here, and then this trend line here appears to be the neckline of that reversal pattern. Can this reversal pattern be validated? Well, we already have price breaking out of the neckline here, but I'm not seeing price action maintaining that uptrend scenario. But to help us navigate the structure at this point, I will not ignore the possibility of the bias. Like we said earlier, we do have the fact that the dollar is at a resistance point. It could drop. We never can tell. If it drops, the US oil becomes cheaper, and then we could see increased demand. And if the geopolitical tension continues, we could see the demand for oil increase as well. So because of this, I would like to position myself above the $70.75 level in order to continue that uptrend move. I would like to risk some buy position around this area and see if the market will climb above that structure. If it does, I'm willing to buy and then ensure that I have my stop loss way below the previous low, which is about 37 to 45 pips depending on where your entry point is. And if price continues to climb and find new highs, then a breakout of the key level at the $71.50 level will welcome more buy positions for us to maximize that uptrend move. So for me to buy the US oil spot, I would want to see price break out of that $70.75 level first. So that is how we are going to be navigating a bullish perspective today. Now, if the bearish momentum persists and continues to dictate the pace of the market, well, I want to see price drop and break down the support line of this range bound structure for us to continue that decline. So I would like to see price take out all the buy positions here, get some liquidity in the form of a retest of structure to join that decline to the downside. Remember, we said earlier that for the existing sell position, we should ensure that we move all stop losses. I hope you have done so. So let's see if this sell momentum will continue in such a way that it breaks down the $69.85 level. And for short-term traders, that is scalpers and day traders who are looking to scalp and taking some scalping and out of the market, well, you could be capitalizing on this small opportunity here between this trend line and this support line, which is about 75 pips of price action. So a breakdown retest of that trend line could be a good opportunity to join a bearish move to the downside. And if price further breaks down, then you could be adding more sell positions to your existing trade. So you can see how this descending trend line is going to be playing a significant role in guiding our trading decisions today. So I encourage us all to mark out this level appropriately on our chart, as we are going to be needing them to navigate the current market dynamic today. If you have any questions whatsoever, feel free to let me know in the comment section. I will be taking the next 5-10 seconds off. I think that's enough so that we can see if there's anyone who needs some further clarifications or needs to ask some question, so we can attend to it. So I'll take the next 5-10 seconds off. Let's see if there are any. And please do not forget to give that video a thumbs up. Your likes are important to me. And of course, this is one way you help this community to grow. And thank you very much as you do so. See you around soon. All right, all right. So I see your comment, Odwena. Good morning to you. Oh, you're welcome. I'm very glad you found that helpful. Gold has been tremendously beautiful for us all this week. We are going to be going into that in a moment, so stay tuned in on that one. All right, all right. So, in the absence of no questions, I want to assume that we are all on the same page. So, with that said, let's move on into the next asset on our watch list. Stay tuned in. So the next asset we are looking at this morning is the GBPUSD, the British pounds against the US dollar, and what a week we have here. In fact, we were buying the GBPUSD at the beginning of the week, though we were able to scoop in some modest size of profit before that bearish momentum began yesterday. And I can remember updating us on both my TradingView and Telegram platform that we move all stop losses, securing the buy position. If you had done that, you must have been taken out with a reasonable amount of profit, though not that significant compared to what we usually look forward to. However, the last couple of hours has seen the pound sterling drop sharply, even below our key level at the 1.3040000 area, and this was as a result of the weaker UK economic data that came in this morning, breaking down that key level to emphasize the strength of the sellers at this point in time. Now, let's quickly run through, for the sake of those who are joining us for the first time, let's quickly run through what we talked about here on Monday and what structures we were looking at to help us navigate through this market dynamic. Now, I will only be deliberating on the 1 hour time frame. Remember, we already done a top-down analysis on this one. You can check my Monday video to have an overview into this. So on Monday, we had a couple of structures here. The first one was the fact that price action was trading within a descending channel that we identified on the 4 hours time frame. Now, this is the resistant line of that descending channel right here. And of course, we were anticipating the breakout of this resistance to incite a rebound for the British pounds. Now, in addition to that resistance line, we had a range bound structure, as you will see. For the first 11 to 12 hours or so, price action was confined within the 1.30700 level and the 1.30400 area to emphasize the prevailing uncertainty at that point in time. And usually when we have this kind of range bound structure, we want to exercise patience, waiting for price to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Now, during our live session on Monday, this was where price action was. During our live session on Monday. And I can remember mentioning that due to the fact that this area here has been showing signs of buy pressure since last week, Thursday, that the chances that buyers can take over this market this week is very, very likely. Now, we saw price drop at the beginning of the week, dropped into this area. We saw buy pressure resume. And I was mentioning here on Monday that if price comes back into that zone, that is this area between the 1.30500 level and our key level at the 1.30, we look to buy the GBPUSD above this area, and this was exactly what we did. Remember, we bought above the structure. It came back yesterday morning, and of course we did add another buy position at the breakout of the resistance line at the 1.30700 area. We saw the first buy position move over 50 pips. The second one moved over 30 pips before the bearish move came in, and we were able to take in some moderate size of profit on that one before that bearish momentum came in. I personally missed out on this strong engulfing bearish candle that pushed price to the downside. Like I did tell you, this was an immediate reaction to the poor UK economic data that was published this morning. So with this being said here, how do we intend to navigate this? Is this the time to start selling the GBPUSD, or are there any chances that buyers can recover from this strong and negative reaction to the UK economic data? Well, from the fundamental perspective, the drivers behind the scenes that influence the sentiment in this market is more on the negative side for the pound sterling. Now, we saw this morning the weak UK CPI data. Report showed that the inflation softened to how many percent? I think 1.7%. Yes, exactly 1.7% this morning. For the previous month, that was what the report gave us, and which was of course below the 1.9%. And this has triggered a sell-off in the pound sterling, particularly against the US dollar. Now, the core CPI inflation in the UK also decelerated faster than expected to 3.2%, raising concerns about the UK economy and increasing the likelihood of the Bank of England cutting interest rates next month. Now, the service inflation in the UK too as well, a key indicator of the key indicator that the Bank of England usually use to understand inflation, also dropped from 5.6% to 4.9%, adding downward pressure on the pound and of course increasing that expectation of an interest rate cut by the Bank of England. So you can see things are not looking rosy at the moment. Interest rate cut is looking very likely for the British pounds, and considering the resilience of the US dollar at this point in time, I think this is high time the US dollar take advantage of this to continue to hold strong, and the expectation of moderate interest rate cut from the Federal Reserve is still a supporting factor for the US dollar. Now, from the UK economy, we've had some very good figures. We saw a very good non-farm payroll report. ISM service PMI for September shows strong growth, and this has reduced fears of economic slowdown and contributing to the optimism surrounding the US market. Now, with all of this said, there isn't any immediate positive driver for the British pound at this point in time. Most of the market reaction have been negative due to the weaker than expected inflation data, which could push the Bank of England to consider interest rate cuts. However, it is important for us to note that a few potential positive drivers could emerge from other areas in the broader economic landscape, even if they weren't highlighted in this review. Now, for example, while lower rates may weaken the currency in the short term, they could eventually boost economic growth by making borrowing cheaper and potentially leading to a better business condition in the long run. Now, the wage growth is slow. It is still rising, which could provide some support to consumer spending and economic resilience. So these are long-term factors actually, and less immediate compared to the negative pressure currently driving the pound sterling to the downside. Now, on a long-term perspective, we could be seeing this as a retracement move building up for another wave of bullish momentum. Remember, the British pound has been on a long-term bullish run for about a couple of years now. Now, with all of these informations here, how do we intend to navigate this market from a technical standpoint? What is the structure on the chart saying? And of course, we know our price action tells us how market participants are behaving at a specific period of time. So in order to navigate this market today, I have a new technical structure to guide our trading decisions. Now, the first thing I did here was to acknowledge the downtrend scenario. As you will see, since last week, Thursday, Wednesday, last midweek, we have seen price action drop significantly, finding uniform lower highs, as you will see here. And if we connect the series of lower highs, what do we have here? A beautiful descending trend line. And you know how we use our descending trend line. As long as price remains below the trend line, we do want to be looking out for patterns and structures that supports the idea of selling. Now, with this strong bearish momentum slicing through this demand zone, remember we had a demand zone which has been very strong since last week Thursday. Was it last week Thursday? Okay, last week Wednesday or Tuesday, I guess. If I extend it further into Tuesday's session, you see how this area has supported buying opportunities. So anytime price comes in here, we see buyers push price to the upside. The same thing happened here. The same thing happened here. And in fact, the same thing also happened here on Monday. On Wednesday. And then look at what happened. Finally, price action sliced through, breaking down that structure to the downside. Now, in the last 3 hours or so, we can see that after price action tested this lowest point for this week at the 1.29825, we have noticed some buy pressure resume again, which for me, I consider this to be a retracement move of this bearish impulsive leg that came to the structure. So we may likely see price retrace a little bit back to retest the descending trend line or that demand zone area to continue the downtrend move. Now, if we look at the distance between the current price and this zone here, we are looking at a minimum of 30 to a maximum of about 60 pips to catch here. Now, will price even get that far? We don't know. If you are a scalper, day trader who is willing to capitalize on short-term trading opportunities, you might be looking for some entry around this particular area to join the move back into the structure. For me personally, I'm looking at things from a long-term perspective, so I would rather wait for price to come into the zone while we exercise patience and wait to see how the market is going to be reacting to that structure. Now, what is it I'm going to be looking out for when price gets into that area? Well, very simple. For those of you who have been with me for a while, you know what we look out for. We will look out for reversal patterns like double top, head and shoulder patterns around this area. All we just want to see is signs that buyers are finding it difficult to break through that zone, and this will reflect on the chart as continued selling pressure. And if that is observed, we will sell the breakdown retest of that neckline to join that decline to the downside. So that is how we are going to be navigating this current market dynamics. And if price goes ahead to break down this lowest point at the 1.29825, we will be adding more sell positions to our existing trade. So a quick recap of what I just said here. So we are looking at two things. First of all, we want to see price come into this potential sell window anywhere around this area. We look out for reversal setup to join the decline. That is one perspective to this. That's what we look out for. And should in case price does not come into the structure, it is not every time price action comes back to retest structure. There is a theory that market price action traders usually look for. It's not every time it does this, but if it does that, very good. giving us a wider way to jump into a sell position. But if it does not do this and instead it continues to drop to the downside, then a breakdown retest of the support line at the 1.29825 will be all we need to continue the downtrend move. So that is how we are going to be navigating this market today. Now, there is one more thing I would like to call our attention to here. Despite the fact that we are looking forward to a long-term downtrend scenario, we cannot ignore the potentials that buyers could come in. Now, this strong bearish momentum we see here is an immediate reaction to that report. Now, it could take some while before market participants digest the implication of this report, and if they look at things from a long-term view, they could see chances that the pound could increase in value. And as a result, we cannot ignore the potentials that buyers could come in from a long-term perspective. Now, if I am going to be buying for a long-term perspective here, a breakout of the structure, retest of the structure will be all we need to continue that uptrend move. So technically speaking, above the 1.30625 will be a good opportunity to join a buy from a long-term perspective. Remember, this area has been a strong demand zone, so we could likely see that area be respected one more time to push price to new highs. So that is how we are going to be navigating a long-term bullish perspective from this particular area. So I hope I made myself very clear here. If you have any questions, feel free to let me know in the comment section. So as usual, I will take the next 10-15 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list. So please do not forget to give that video a thumbs up. Your likes are important to me, and you continue to support the channel as you do so. Thank you very much, guys. See you soon. All right. So in the absence of no questions, I want to assume that we are all on the same page, right? I hope you've marked out the levels accordingly on your chart. And I noticed that no one is clicking on the like button. Why? We have over 9 to 10 people on board and we only have 2 likes. What is happening here? Please help click the like button. Let's make the number tally with the number of people on board. It doesn't cost us anything. Please let's click on the like button. Thank you very much as you do so. Okay, so we are going to be moving into the final asset on our watch list for this week. So the final asset on our watch list for today is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And what a tremendously profitable week we've had here on this particular asset. Though I was not able to take multiple entries on the XAUUSD due to the uncharted territory we are in, but we were able to scoop in some significant amount of profit. Though the week did not start very well for us. Remember, we bought at the retest of this zone around the 2660 and 2656, which obviously did not do very well as we got taken out of that position in a loss. So this was what we were looking at the beginning of the week. We had the beautiful range bound structure marked out, as you will see here. And then prior to the beginning of our Forex Morning Mastery on Monday, we already saw price action break out of the resistance line. So I was of the opinion that price coming back to retest and the appearance of buy pressure around this area will be a beautiful opportunity to continue the uptrend move. And you know, as the market is, it's an uncertain environment. The market does what it does. It drops to the downside, take us out of all those buy positions in a loss. But it's all well and good. Things later came back positive for us as we were able to recoup the loss and of course made some more profit on top of it. Now, during yesterday's session, I gave a couple of updates on my Telegram and TradingView platform where I identified new trading setups to help us navigate that consolidation phase we saw there yesterday. And this was the setup we were looking at yesterday morning. The first thing we did here, I think I updated us around here yesterday morning. Around here, we identified a temporary demand zone around the 2645 area. As we saw here that since last week Friday, this level adds a memory for buying power. So every time sellers push price into the structure, we saw how it became difficult for them to follow through, and as a result, buyers come in, take over the market at every point in time. So in my commentary yesterday, I identified this and gave us this beautiful trend line to help us feel comfortable buying the XAUUSD. So we are looking forward to that breakout retest of structure to continue that uptrend move, and this was exactly what happened. We saw price break out of structure, came back to retest the structure. I think I shared something on the 15 minutes time frame later on yesterday exactly. I shared something on the 15 minutes time frame. I gave us a buy window between the 2642 and the 2648, an area where we should be placing a buy. And if you had done so, you will currently be running with approximately 320 pips in profit at this point in time. And for those of you who capitalized on that opportunity, well done, and kudos to you. So it is high time we start moving our stop losses. That is for those of you who still have your buy position running, buy position active. You want to be moving your stop losses right now. And I still think that anywhere between the 2677 and 2674 seems most appropriate to move our stop losses to. Remember, due to the volatile nature of the gold commodity, we do want to be giving enough breathing space for price action to breathe. So move your stop loss within those areas and let's see how the market is going to play from this moment on. And with this well secured position at this juncture, what is going to be our next plan for today? And in fact, for those of us who missed out on this opportunity, do we have any chance of joining this uptrend, or are we at an overbought situation where sellers could come in at any point in time? Well, let's take a look at the major drivers that is influencing the sentiment in this market and see what is likely going to happen today. Well, the major factors here still is in line with the geopolitical tension. The rising tension between Israel and Hezbollah and Iran have driven the demand for safe haven like gold, silver, platinum, and the likes, helping them gain more traction to the upside. And however, the US Treasury bond yield at this point has also dropped significantly. I think about 8 basis points as at this morning is up to about 4.003%, making gold more appealing to investors by reducing the opportunity cost of holding non-yielding assets like gold. Now, yesterday we saw a weaker U.S. economic data, which was one of the major event from yesterday that supported the gold, and that is the New York Empire State Manufacturing Index for October. Remember, we said this earlier. It came in at 11.9, I guess. Let me see. Yes, 11.9 minus 11.9. Look at it compared to the previous month, which was at 11.5, and market were expecting a 2.3, and look at what came in, minus 11.9. And we all know how sensitive the manufacturing sector is to the United States, and that was quite a red flag, giving investors an opportunity to keep buying safe haven assets like gold. Now, another factor that could further support this, and then we also had speeches from the Fed officials in the last couple of days. We talked about Mary Daly, Raphael Bostic. All of them hinted at potential rate cuts if economic conditions align. Now, for me, I see this as a dovish remark, and it could further support gold prices. Now, the easing inflation expectation in the United States too, which further supports this dovish outlook of 25 basis interest rate cut next month, is another avenue that I still see could make price go to the upside. So for me, gold still, the path of least resistance for gold at this juncture still remains very, very bullish. However, we cannot ignore the fact that the US dollar is very, very strong at this point, and I showed you earlier that we are at a strong resistance line where everyone will be looking at to see if price will break out of that resistance line or price could drop from that area. And if it breaks it out, this could cap the upside trajectory in gold. And another thing I don't know how possible that is. The pricing in of a smaller interest rate cut in the upcoming FOMC meeting, and I think this could limit the potential upside for gold in the near term. There is about over close to 90% leaning towards a 25 basis point cut in November, and for me that is small, and it has been supporting the gold, and it could influence or cap the upward trajectory in gold. Now, in order for us to understand how market participants are capturing this latest development, I have a new structure on the chart which we will be using to navigate today's market dynamics, and I'm going down into the 15 minutes time frame, and let's look at the 15 minutes time frame here. So this is what I was able to come up with on the 15 minutes time frame after taking into account the character of price action since last week Friday. So I have a trend line, a resistance trend line to the upside here. You can see this area has been a strong selling niche for about 2 to 3 days, as you will see here. Strong selling niche before we finally saw that breakout happen during the early hours of today, further emphasizing the strength of the buyers in this market. Now we have a trend line, an ascending trend line, which has been supporting this ascent since the beginning of this week. Look at this. After connecting the series of higher lows, we have a beautiful ascending trend line to help us navigate this uptrend move. And you know how we use our ascending trend lines. As long as price remains above them, we will continue to look out for patterns and structures that supports the idea of buying this asset. Now, in addition to that trend line is a couple of levels here. During the Asian session, we saw how price action was confined within a range before it got broken out of this morning. That is between the 2,670 and the 2,665. That's about a $5 range bound, and price has broken out of that structure. Now this is where, for those of us who missed out of the opportunity, let's hope that the market will give us a second chance to be part of this uptrend. And what am I looking at as a second chance? Well, are we going to see price action retrace maybe back into the trend line? Look at how beautifully this trend line and that resistant line at the 2,670 is. It's a very beautiful confluence we have here. Now let me show you what I mean. Now look at this resistant line here. Can you see it? And look at this ascending trend line we identified earlier, and then look at the resistant line of that range bound structure, of that range we talked about earlier. All of them are within that confluence I'm talking about. So are we going to see sellers come in maybe in a couple of hours or so, bringing price back into the structure? In fact, I hope that will happen. If it does, it will give us more room to capitalize on this uptrend move. And if it does, we want to be looking out for reversal setups like double bottom structures, inverse head and shoulder, falling wedge, whichever case it may be. We buy the breakout retest of the neckline and join that uptrend move. For those of you who will be part of the Go-Go Challenge today, we are going to be scalping the market using the same strategy together. You saw what happened to us yesterday and on Monday, how we maximized on this bullish opportunity, and let's see if we can repeat what we did in the last couple of days on this one. So this is what I'm looking at as regards to joining that uptrend continuation, and especially for those of us who missed out on this last opportunity. Now we have a new resistant line here, which is at exactly the 2,682. Am I correct? 2,682 level. So will price break out of that structure, or are we going to see selling pressure push price to the downside? We already have a shooting star candle somewhere around here showing us signs that sellers may push price to the downside. If that happens, the next bus stop we are looking forward to is this trend line or the 2,670 to continue the uptrend move. But if that is not the case and the gold continues to get stronger by the day, well, a breakout retest of the 2,682 will be a good opportunity to join the uptrend move. So let's see how the market will play out around this area. Now, for those who are willing to sell the gold at this moment, because I know there are some of us out there who are only waiting to sell the gold at this point, waiting for that crash to happen. Well, for me, I'm not willing to join any sell right now, at least. Even if I see signs of selling pressure around this area, I will rather wait for price to get into this bus stop before deciding to join a sell. Now, the only condition that will make me sell, that is if I'm looking at this from a long-term perspective, is for price to drop below that ascending trend line, retest it, and then I can start considering selling the XAUUSD. And in fact, if I'm selling, there's still a bus stop here. Look at this trend line. This trend line was broken for this recent bullish leg we saw here. So if even if I'm selling at the breakdown retest of that trend line, this bust up here may likely play a significant role in pushing price to continue the uptrend move. And between the breakdown of the ascending trend line and this leg, we are looking at about 140 pips there. So the only condition that will make me sell is for this trend line to be breached and broken to the downside. So this is my simple view on the XAUUSD for today. I hope I made myself very clear. But if you have any questions, feel free to let me know in the comment section. So I will take the next 5-10 seconds off. Let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. Stay tuned in. All right. So in the absence of no questions, I want to assume that we are all on the same page, and it's at this juncture we have to call it a day here. It has been a wonderful moment with you guys. I really appreciate your time. And for those of us who have been part of a profitable journey this week, well done and kudos to you. Well done for staying faithful with the analytical approach. And let's see how far we are going to be taking this for the remainder part of the week. So today we were able to take on all the financial assets on our watch list for this week, which includes the USOILSPOT, the GBPUSD, and of course my favorite, the XAUUSD, all of which we were able to identify simple trading setups that we are going to be using to navigate the market dynamic today. I hope you marked out the levels we talked about here. You will be needing them as a reference point to guide your independent trading decisions. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you do want to be having a well-defined risk management strategy in place. And for those of you joining us for the first time, I do hope you are able to gain one or two things from what we have discussed here today. And if you have done so, you don't want to be missing out on our subsequent editions. So I look forward to seeing you guys same time on Friday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets have been doing and of course prepare for the final trading day for the week. So it's on this note I want to wish us all the best of luck. Trade smart, trade consciously. Do have a wonderful evening, everyone. Bye.